Hello everyone and welcome back to another Trade Journal episode where we are getting better 1% each day together. All of this by trying to learn from our actions in the market, and the question today is how can you learn from trading losses? Because as you can see here, I did indeed take a loss yesterday when trying to short the S&P 500 at this supposable range high. Honestly, I'll admit I wasn't really sure and I was contemplating whether I really wanted to make this video, but then again I thought, what's the point of a trade journal if you only win? After all, there are already enough traders, or let's rather call them YouTubers, who apparently only win, and that's simply not the reality. Certainly, I don't want to be one of them. And finally, I believe that one loss can potentially teach you more than a whole series of wins. So to answer this question, how to learn from trading losses and why I entered here and whether I potentially made a mistake, for that we need to obviously look at our three types of biases again quickly, and also have clearly established guidelines or rules for our trading. So as you know, if you haven't watched my last episode where I introduced this day trading strategy, you can divide the market into three phases basically: the bullish phase, the transitioning and ranging phase, or the bearish phase. And we've also talked about the rules. Number one obviously was to establish a bias for the day or the moment, and I do that based on the 2 hour at least for my day trading. So let's jump right in and see what this looked like yesterday. So for the moment, let's get rid of all my drawings so we can start from scratch and I can explain my reasonings better. When I sat down in front of the charts, we were at around 4 o'clock German time, looking at the 2 hour time frame of the S&P here. And this is what the chart looked like back then. So remember, the first thing we want to do is obviously establish our bias. What was my bias? Having worked down our way from all up here, taken out some liquidity down below here, what I assume to be the major swing point, so basically the crucial lower high to break for a new uptrend, was the level of around $4,164. For a clear continuation to the downside, you would have had to close below $4,119. So according to my rules, we were within a transitioning ranging stage of the market where potentially I'd be allowed to short within an area of interest on the 2 hour time frame, as well as long within an area of interest on the 2 hour time frame. And this is also where potentially the first learning lesson comes in, because looking at the chart more clearly, we were ranging with a big but. Because have a look at this level here. What about this? Why did I still see us as not having broken the downtrend, even so we did close above this swing point? Because identifying my swing points, but personally I like these rounded tops, while here you simply don't have that. This is not a clear swing point for my liking, let's say. However, at times in these situations it really also helps to put on the line chart, because there the swing points, if you rely on closing prices for your market structure, become a lot clearer. And then I potentially would have identified this as also a crucial swing point, which we did break then by closing at around 4,150 on the 24th in the evening, and thus primarily I should have looked for longs as well, at least. Nonetheless, I did identify this as being a range potentially, and therefore my next step was identifying potential areas of interest. This gave me the level of around 4,133 for longing, potential bullish target box. And for shorting, let's also draw our fifths. The area that we had already entered various times, starting at around 4,147 up to 4,154. Now remember that areas of interest for us can also be defined by liquidity pools. As you can see, we did indeed run the liquidity above these highs, taking out 4,166. And also you always want to look out for potential fair value gaps, and having a closer look, you see that indeed I could identify a 2-hour fair value gap starting at around 4,158. With that, when we hit these areas, all of my criteria were basically met. I did establish a bias. In this case, we are ranging, so I am allowed to short and long, being within a target box. And secondly, I waited for my area of interest to be hit. So let's zoom into the 15-minute time frame, our entry time frame, and have a closer look at what happened there. To find an entry, you would repeat the same game. Take your fibs, identify a potential target box, see whether this target box does line up with a fair value gap. It does indeed. So you can then potentially take a short position at this level, define your stop, and then at least go for a 2-hour trade. In my case, I wanted to hit this bullish fair value gap to the downside. Let's play the chart and see what then happened. And you can see that indeed, first of all, we did go a bit lower, so adjusting my target box a little bit, also adjusting my order. Then you see what my trade really looked like. Averaging out to a potential 2-hour trade. It was, I think, yes, something like that. So let's continue with the chart, playing forward, and then you can see here that indeed my stop loss got hit and I was taken out of the trade. So what went wrong? If one, on the 15-minute time frame, we did have a market structure break, and the price pulled back to our target box plus fair value gap. And indeed, if you look at it, this was the low to be broken. Then we created a new high. So market structure break went up here. We did break it on a closing basis, pulled back right into our target box, rejected once, but then went up again and took out the lows. Well, having a closer look, here we do see that when we did reject, we actually really shouldn't have returned another time. So could I have left the trade here? Potentially, but rules are rules, and you really want to give your trades the possibility to play out. Potentially it could have taken out this high and then continued lower. One thing that I will admit is that my gut feeling when I was contemplating entering the trade was bad from the get-go, and let me also show you why. Because additionally to all the price action that I'm constantly describing here, I also look at momentum. And as you can see, even so, momentum alone is by no means a reason to enter a trade. Normally you want your price action reasons to line up with the momentum being overbought if you are intending to go short. And the same for the long side. If you find momentum at the downside in the overbought area, you normally looking at good possibilities to enter a long trade. So when we came back down here and we pulled back up into my target box, but momentum didn't follow through, I did have this bad gut feeling. Nonetheless, everything else was lining up. Getting back to the question of the day and zooming out to the 2-hour time frame one more time. What is it then that we can take away from this trading loss? Well, as I've already said, certainly for buyers, also consider looking at the line chart as I illustrated. This sometimes makes things a lot clearer and would have given me this caution sign with respect to rather also focus on a long trade. Then secondly, I guess that yes, my bias was correct, especially if I show you where we are at potentially now. As you can see, we did indeed reject at the highs of this potential range. However, I was most likely early with respect, for example, to momentum. Finally, another thing that I realized, if you zoom out a bit more, which you always should, then you will realize that actually we are right smack back within the old 2-hour range. Let me just stretch out this range high to the left, and you see that exactly the same levels did keep us squeezed in before we had this potential question mark fake out or breakout, and now we are back within exactly this range. So final question, because with this strategy we always want to consider both sides of the market and see what is most likely for us. Did I miss a potential long trade? Well, my target box apparently was never hit. However, one more time, line chart, you can see that I could have taken a fib pull from here as well. And what would that then have given me? It would have given me a pullback right into my 618 here. So this should have also been a potential warning sign when I was starting to look at the market, because we did reject from this liquidity taken, but how at the same time we had strongly moved up from touching our target box here. Finally, looking forward to what we can potentially expect for today and maybe tomorrow. Yes, we might still be in this transitioning ranging phase. However, I lean bullish because looking at the 2-hour market structure, it certainly is bullish. I wouldn't blindly short the highs here again. At the minimum, I would like to see a clear deviation above this range on a closing basis, or price digging into this 2-hour fair value gap. So best of all would be a deviation up into this area, and then really also a market structure break on the 2-hour again, to not be caught up in entering too early again. If you found today's episode helpful, then don't forget to subscribe to the channel, support me and my work, and like the video. Thanks for that. And if you are interested in more information on how exactly this little day trading strategy does work, then watch the video I link up here. Until next time, bye bye.